All right. Hello, everyone, and welcome to today's call of the Crypto Mondays Collective. We've got an awesome featured guest today, Lucas Tcheyan. He's a prop trader with Galaxy. He's been a friend of the collectives for a while. But first, real quick, first, welcome, Lucas. Welcome back.
Thank you. Thanks for having me.
Looking forward to hearing your talk. Just a couple minutes of collective business, and then I'll turn the floor over to you. Um, Again, happy Friday to everybody. This week, this upcoming Monday, Crypto Mondays NYC, will be Crypto Monday Bitcoin at PubKey. So we've actually got 21 shares is going to be speaking there. So should be a packed house. And then the following week, Lucas, as we were discussing, is going to be Crypto Mondays Dubai. And I'm super excited for the fireside chat with Iliev, the co-founder of Near and arguably the smartest guy in the world at the intersection of crypto and AI. And with 10 days to go, we're at 1,073 pending RSVPs. So we're going to have a big crowd there. And then Lucas, I don't know to degree you even know what we started something in February called the Decentralized AI Agent Alliance, and we're building out our own community management AI agent. And if you're going to build anything decentralized, you come across the same problems everybody else building decentralized AI agents. Uh, are going against. So we started this organization to solve the problem instead of in 1,000 different silos to do it collectively. And after a couple months, we're at the 70 founding members, just passed a couple days ago. And it's, big and small from big companies like DCG or Polkadot to, a bunch of smaller companies, across and, adding new ones. And if something Galaxy has an interest in, we can talk to Galaxy about that, as well. Obviously, I know you guys are knee deep. Um, so this is from today's invite. And again, this isn't the first time that Lucas has spoken here. This is last year when he spoke on May 24th. And I got to say, Lucas, you haven't aged a bit.
Thank you.
Uh, and also, we had the pleasure of Lucas actually talking at the second class ever in our first cohort of our AI Web3 Accelerator last April. So that was just almost exactly a year ago. So, Lucas, it's great to have you back. And with that, I'll turn the floor over to you. Right, since the last time you spoke, you transitioned from being, in research to being in trading, which, I was a long time researcher. And I would tell you, I think the majority of researchers really wanted to be traders.
Yeah. Well, thank you very much, Lou. Good to see everyone again and glad to be back. This is a really awesome group. And always I'm like I was talking to Lou just before this. I've prepared some thoughts on kind of what I'm seeing in the markets, what I think is kind of driving crypto markets right now, and then just a few examples of projects that I'm looking at. Obviously none of this is financial advice or anything like that, just to kind of help you guys understand how I'm looking for opportunities in this very challenging market. Like Lou said, last time I spoke to you guys, I was
Well,
on
and
research.
and I'm sorry, just hold on a minute.
Yeah.
Lucas also asked him, certainly give it a try. Always, up for trying new things. Instead of generally wait till the end for questions, Lucas wants it to be interactive. So if as he's talking, anybody has any questions, feel free to open up your mic and ask Lucas a question.
Yes, please, definitely. Part of me doing this is doing some market research, seeing what people are interested in terms of themes and tokens right now as well. So I'd love to hear throughout. Lou, you said everyone in research wants to be on trading. That was very much me. I would say I now regret that decision immensely. On research, you have the benefit of, being very creative. You can be idealistic a little bit. And your goal is to kind of uncover trends and dive really deep into why those trends might be interesting. And so that's what I was doing before. I've now transitioned over to the trading team where you have to be brutally honest with yourself about what actually has the realistic opportunity to increase in price, and what are the true underlying drivers of that price action
Hey,
yeah.
Lucas, before you go into that, you want to maybe just give a little bit of an overview of Galaxy?
Oh yeah, sure. And yeah, so I'm at Galaxy Digital. We are a a diversified financial services firm for crypto. And so, we have about almost, I think, 500 people globally now. Our main office is here in New York, but we also are international, London, Hong Kong. And we, basically, if you're a traditional financial institution or more of a crypto native institution and looking to get into the crypto space, we have a full diversified suite of financial services that we provide. We've got a very large OTC derivatives desk that trades options. We have an investment bank, an asset manager, a venture capital portion. We have a research team that was previously on that, publishes research completely free to help people understand what's happening in the space. And then we also are a large Bitcoin miner. And for anyone who knows that follows us company, we actually have recently kind of diversified part of that Bitcoin mining actually into AI data service provider as well. So our CEO is Mike Novogratz, who you might know, a bit of an eccentric figure in this space, and a well-known trader. And so I was on
Former Goldman Sachs partner.
Yes, exactly. And so I sit on the research team. I mean, I did sit on the research team. I now am on our prop trading team, and I would say we have a lot of macro traders on that team who also obviously trade Bitcoin and Ethereum and Solana and other majors. But they also are always looking for opportunities in the alt space. And my background in crypto is I think a lot of people start in crypto with Bitcoin and then move down the stack. I was the opposite. I had a friend who first introduced me to crypto through degen yield farming on Polygon in 2020. And so I started, I would say, in what people call the trenches, and then started to move up the stack. And so while I love Bitcoin, and I have since evolved my views to view it as probably as the most important asset in the space, my expertise really lies much more in the altcoin space, especially looking at kind of medium and small cap altcoins. That can be everything from applications to meme coins. I was a very big NFT trader during the prior cycle. And so, today I am kind of on the scour in this very difficult market, trying to understand in this depressed alt market, what are the opportunities, what is going to last, and kind of what's coming next. And so I'm going to talk a little bit about that. But I first just kind of want to start by talking about the crypto market overall. And I think crypto and equity markets in general right now, the big theme is uncertainty. It's the dominant trend, and it's having a dramatic effect on all markets. And I think, the best representation of that is the price of gold, which continues to hit new all-time highs and see new allocations. I think this uncertainty is driven a large part by what's happening with the Trump administration and, a lack of clarity over what their true underlying motives are. Are they trying to refinance the debt? Do they want to contain China? Do they want to reshore U.S. manufacturing? Is it all of the above? Are these purely negotiation tactics for short-term, to kind of short-term make things worse and then improve them for political reasons? It's I spend a lot of my time talking to macro people. I'm not one myself, and you hear opinions all across the spectrum. And what that means is you have not a uniform view, and that means markets as a result are very volatile and very uncertain. And so I think largely where we are right now is there's kind of two camps. There's the ones who believe Trump will cave into political pressure and fold, and in that case, the market's going to go back up. And there's the ones who believe that either Trump has real intent to follow through with the policies he's starting to put in place, or has really no plan and is putting in motion a set of policies that will not be able to be undone easily or have ramifications that will not be able to be done uneasily. And in that case, markets go down. And I think where we sit right now, especially in the crypto markets, is, people are still hopeful that it's the former, that this will be unwound over the next few months as things improve. But, I think the longer that they do not, the more we tilt into the latter. And for myself, I think that's why we've seen Bitcoin remain above 80K or so right now and continue to show some relative strength. we've seen some decorrelation from US equity markets. Some people would attribute that to Bitcoin being a safe haven asset. And I think while maybe that's incrementally more true than it might have been previously, I think a big part of that is that crypto as a market in general just tends to front run what other risk markets do. And so just like crypto markets sold off much faster than much more before equity markets sold off, I think crypto markets are stabilizing right now in anticipation of equity markets maybe bouncing. And so if it does turn out that, we're headed for a continued uncertainty and, the policies that are being put in place now are going to remain, I think, we might be in store for a lot more pain. But I am hopeful that, if anything, that pain leads to Bitcoin continually becoming incrementally more viewed as a safe haven asset. And kind of my base case would be, in a worst case scenario that, Bitcoin maybe sees a lot more downside initially, but that downside is an incredible opportunity for future upside as people move away from using it purely or for speculation and think, well, actually, given the state of the world, I need to hold this as part of my portfolio as a hedge or as some sort of store of value. I think, in terms of other thoughts on crypto markets, I think we've seen crazy price action over the past 6 months. And what's really interesting to me is just how responsive crypto markets are and how much they get ahead of everything else. So, we had the initial Trump election and you saw immense euphoria and you saw crypto basically price in all of the best case scenarios possible immediately. Then we saw Trump come into office and people's expectations start to be aligned more with what the reality of the situation was. And we saw crypto kind of front run the broader market sell-off as it normally does. And we now find ourselves in this no man's land. On the one hand, we have, what I would say is a very strong pro-crypto administration. They've been clear they're going to pursue a crypto-friendly regulatory policy. That could be, the holding of actual Bitcoin by the federal government or some sort of strategic Bitcoin reserve. Or it could also be more structural, long-term regulatory things like the implementation of crypto regulation that opens the door for broader adoption of blockchain and crypto assets. So, the stablecoin bill and the market structure bills that are currently working their way through the legislatures, I think, are the main focus there. But, as I said before, on the other hand, there's growing concern, especially amongst, I would say, crypto market participants and traders, that the long-term ramifications of what's being done right now will not be able to be undone. And that could lead to growth slowdowns. It could lead to serious geopolitical shifts. And in that type of environment, it's very difficult to see the non-Bitcoin aspects of crypto outperform. So what do you do about crypto in this highly uncertain environment, right? I'm an altcoin trader. My job is to dig deep, find what's interesting, and even in these very uncertain times, see where can there be outperformance. There's always opportunities in crypto, and for me, there's kind of I would say 5 themes that I think are dominating the discourse in crypto markets right now. You've got Bitcoin, always the biggest theme, and the same question that comes up continually. Is it a store of value and safe haven asset? Can it decorrelate from US risk markets? Or is it just going to continue to be, a risk-on asset? You've got discussions about the future of general purpose L1s. Is what's happening in the ETH BTC ratio right now kind of the canary in the coal mine? Why is Ethereum going down so much? Who are these sellers? Is it a reflection that Ethereum is not living up to the promise that it initially had? Or is it a reflection of a broader risk-off market environment? Is Solana destined for the same type of thing? And what is going to happen with the slew of new general purpose L1s that are going to be coming to market over the next 1 to 2 years? Names like Monad, Mega ETH. How do they perform in an environment where you're not seeing huge user growth and you're actually seeing developer growth start to subside? Because that's very different from past environments where we saw these kind of next-gen L1s launch. The next theme I would say is it's very product specific. It's the rise of Hyperliquid. I'm not sure how familiar people here are with Hyperliquid. It's increasingly becoming a big name in crypto. And I think there's a lot we can learn about about why that launch was so successful and why it continues to maintain some relative strength today. The next theme, I think, is revenue generating applications. Are we moving to a more fundamentals analysis base of products? Are we shifting away from narrative driven speculation? And how do those products perform in a risk on environment? Because if they are based more on fundamentals, then you could arguably say a lot of them are already overvalued, and investors are likely parking assets in them currently as kind of like safe haven alts. But that means that when you get to a risk on environment, they likely underperform as investors move out of these safer assets into much more speculative long tail alts. And then the final theme, I think, is RWA and tokenization. And I think this is where there's a lot of excitement in crypto. It's where kind of TradFi and crypto intersect the most. It's where adoption is ramping up. Just look at the stablecoin market cap. It continues to rise. But I think, from the vantage point of an altcoin speculator or trader, how do you take advantage of that? Does that mean that, equity is now more important than tokens? Is there ways to invest in this stuff where the token actually makes sense? Or are we starting to see the unravel of that complete narrative? So those are kind of big themes, and I'm happy to dive into any single one of those individually and discuss them. I thought what would be more useful for the purpose of the presentation, though, would just to say, so based on those themes, like what are 3 kind of assets that I'm looking at? And again, this is like, I'm not trying to shill these at all or anything. This is where I've been spending my time looking recently. And I think that they kind of offer some good heuristics for how you can kind of explore the alt market in such a difficult market environment like this. And I would say the one thing that is like consistent throughout all of them, it's very obvious, is that, and it's a belief of mine, is, users are the most valuable asset for decentralized blockchains. That is right now what is most important for any blockchain that wants to have a future, because they need to have those users to be able to continue to iterate on products and launch new products. They need to have those users to make it attractive for developers to come into their ecosystems. And so I'm really looking for products that have shown resilience in this downturn. And that doesn't mean that they have the same levels of activity as we saw during the bull last year. But what it does mean is that when market stabilizes, or when we see small upticks like we've seen over the past few weeks, that you see similar uptakes in terms of the activity on those platforms. And so the 3 of many projects I'm looking at right now that I think are very interesting is Solana, Hyperliquid, and Pendle. And I'll just quickly kind of walk through a very, very basic kind of my thesis and views on why I think those might be interesting and why they might have some staying power. So, I think Solana, disclaimer here, Solana has been my favorite chain since it launched. It's where I do all my activities. So I'm heavily biased towards Solana, and I cannot even pretend that I have an impartial view on it. But the reason I maintain interest in Solana, and I think that it has staying power in this market, is it has one of the largest retail user bases in all of crypto. And because it caters to a very unsophisticated crypto market participant, it's got very advanced onboarding and distribution mechanisms. Things like Moonshot, these are mostly onboarding and distribution mechanisms that bring people in to speculate on meme coins. Previously it was NFTs, but what that means is anytime there is kind of a risk on impulse in the markets, people have a very low friction way of being onboarded to Solana and joining an already large user base of activity. And that has a flywheel effect, in my view, that gives it staying power and keeps it relatively interesting. And so, for now, that means it's just crypto's casino, right? Because there's not a lot of what I would say are like real non-speculative products that drive a lot of user activity on Solana. I was actually at a presentation by Artemis a few weeks ago, and one interesting and hopeful stat is that if you look at stablecoin transfer volumes on Solana, the percentage which are used for buying and selling meme coins is actually going down, and the percentage that is used for simple payments is starting to go up. So that is a positive, but I fully admit for now it's mostly just the best, I would say, venue for people to be able to get on chain and use the crypto casino. And, one thing that I think is kind of starting to validate this view, because I think a lot of people would thought that Solana was a one-hit wonder from this past cycle, is if you look at Solana on-chain volumes, they've managed to make on-chain DEX volumes. They've managed to maintain, a 40 to 50% market share across all of crypto throughout this ongoing downturn. And as the market has stabilized slightly over the past few weeks, we've seen on-chain volumes on Solana rebound and retake the #1 spot over Ethereum. So for me, that says you have a latent pool of users and capital that are ready to hop back into the space, but are just being patient right now because they recognize there's not as many opportunities. They're probably very burnt out from the shenanigans of the last year. And I think that they're conserving capital and waiting for the rest of the market to recover, but they're there and they're in the and I don't think they're going to move off the chain because there's not an equally attractive opportunities anywhere else. So I'm watching very closely to see how that continues to evolve. Like I said, DEX volumes is something I watch close, but also number of active wallets, developer growth and interest. I go to a lot of hackathons, and what you'll continually see when you go to Solana hackathons is the numbers are continuing to go up, not down. So Solana has managed to kind of build a very supportive developer environment. The foundation is very active. They've hired people like Nikita Beer recently, and they basically are doing everything that they can to make sure that if you're a new developer that wants to get into crypto, the place that you're going to go to is Solana. And I think they're having some traction there. And for me, that's huge because competing with Ethereum, that's very difficult. So I'm continuing to look there. I think also for me, Solana is, if you look at some of the weaknesses of what happened with Ethereum over the past few years, it's very clear that their inability to meaningfully improve the L1 experience has been a detriment. I don't think it's been a detriment in terms of institutional adoption. I think that's where Ethereum continues to excel and is really their advantage right now. But it has been a detriment in terms of making people excited about interacting on the Ethereum blockchain. And I think if you look at what Solana is doing, they are very meaningful or very purposeful in saying, hey, no matter what, we're not going to stall out. We're going to continue to push the envelope. We're going to make sure that anytime new chains are coming out, our performance is on par with their performance. And they're building some really interesting stuff. There's a new project called 00 that I would encourage people to take a look at. It's actually a layer built under Solana. It's a network layer. And basically what they're taking is broadband cables, and they're building basically internet infrastructure layer purpose built for blockchains so that they can handle the speed and throughput and number of transactions happening on blockchains. And they're building it purposefully for Solana, but the view is over time, other blockchains will plug into it. So I like to see that type of stuff. I want to feel every time I'm using the chain, it's getting better, and I continue to see that. And then finally, for me, is the movement into policy. I think, like I said, Ethereum has really dominated on the institutional side. And I was just at a presentation with the head of crypto assets at Apollo, a very prestigious traditional financial institution. And, they have started to move into Solana. They've started to develop, launch funds on Solana. But, what she said that resounded with me is in terms of the biggest kind of headwind or obstacle for Solana right now is institutions have already invested an incredible amount of time and money in figuring out how to operate on Ethereum. And it's going to be very difficult to convince them they should go and do the same thing on Solana until there's demand for the type of institutional products they offer on Solana, right? Because, you know, you can tokenize a real estate fund, you can tokenize treasuries, but, you know, the average degen is not really looking to provide liquidity for those type of things. And so I think that's kind of the major headwind for Solana going forward. And what we're seeing from the foundation is they're investing very heavily in the policy and lobbying area. So they just launched the Solana Policy Institute. They hired the former head of the Blockchain Association. If you look at some of the leading projects on Solana, like Jito, for example, which is a liquid staking provider and also does a lot of the MEV infrastructure, they hired Rebecca Redding, who's kind of one of the foremost crypto lawyers. She used to represent Anchorage and Polygon. And so that for me is kind of like, okay, that's great. So we continue to maintain the retail user base, and we're starting to move into kind of the institutional policy side of things to get that sort of adoption. So that's kind of the first project I want to talk about. You know, I think that's kind of a very basic, quick overview of my thesis for why Solana might have staying power here and why I think it's here to stay. The next one I want to talk about is Hyperlquid. Hyperlquid, for those who are not familiar, is a perps dex at its when it started. It was just a perps dex, and it has incredible user UX. It has no VC funding, which was a very popular narrative last year. And they just did an incredible job of building a product that they knew there was demand for and improving it 10x from anything out there. And as a result, I would say they are one of the first chains that launched with a demand with product market fit. And then once they kind of lured in those users, they demonstrated product market fit, they now have evolved into a general purpose L1. And that's a very different approach than what we've seen in the past. And once again, the most important thing for here is they got the users, right? They launched their chain. They got a critical mass of user. They launched their perp stacks. They got a critical mass of users. And then they thought, okay, we have a perp stacks that does almost 8% of the volume and OI of all central exchanges do. How do we further tap into that liquidity? We launch a chain on top of it. And that allows people to build really novel DeFi applications that have access to an instance pool of liquidity. And so as a result, they are seeing they were seeing excellent growth, and now they're kind of just maintaining their volumes, their OI, and their user base. And in this type of market where volumes generally are dropping, that is very challenging and a very great sign. The other thing that they did is they made their community very rich. Like I said, they had no venture capital firms that were investors in them. And as a result, they were able to airdrop 30% of tokens to users. And this is a chain that at one point reached, you know, a $30 billion FDV. And the great part about that for Hyperlquid is you build a very loyal core user base that then takes that money and recycles it back into the ecosystem. So if you talk to developer teams on the ecosystem, if you talk to users, they're very loyal to Hyperlquid, just as Solana users who are enriched through Solana are very loyal to Solana. And so that gives it staying power. That I think makes it a very attractive chain going forward. And I think it's one of the chains where we're going to see some of the most interesting DeFi experiments pop up. They've built some very cool, I would say, they're called pre-compiles, but basically like fundamental, coding on the chain that makes it for anyone building on the chain that they can launch their app and have a way to earn revenue on their app immediately. And so I'm excited for what they're doing. The final thing I would say about them is they're one of the few chains that has fundamentals that I think stand up to the valuation. And so what Hyperlquid does is 97% of the fees that they earn from their perp stacks, which, different time frames, annualized, you'll see different things, but anywhere from $400 to $700 million annualized is used to buy back their token, and they just hold that token. And so when you talk to a non-crypto native person who's not looking for narratives, who's not looking at this as a liquid VC opportunity, but is looking this much more as like a fundamentals TradFi type opportunity, I can tell you, I've seen it myself, it resounds with them. They say, oh, but what is the use of this token? You say, well, actually, the token has a built-in buyback function, and they're earning $500 million a year. And they say, how much it must be worth 30 billion. No, it's actually the market cap is, around 5 billion right now. And so I think they are building a really incredible product that taps into both the institutional side and the retail side. And I'm very excited to see how that continues to develop and grow. I think they're, the big headwind for them is perp dexes normally attract very mercenary capital. People are there to kind of trade, and they love to trade on a perps dex that doesn't have an airdrop yet, because that means they can lose money and probably still come out net positive at the end, right? And as a result of Hyperliquid's success, we've seen a slew of new other perps decks launch over the past few months that are starting to eat away at some of the user base in Hyperliquid. But if you go in and talk to a lot of the Hyperliquid whales who might be moving over to these other perp dexes, they're actually going to those perp dexes as mercenary capital and will likely repatriate a lot of their capital back to Hyperliquid once they're done farming them. So I think Hyperliquid is probably one of the most asymmetric and unique opportunities in crypto right now. I think it's widely overlooked, and I would encourage people to just take a look at it as one of very few chains that has launched over the past year that is taking a truly differentiated approach to growth and adoption. And then the last product, or last, this is actually an application, not a chain, that I want to talk about is Pendle. I think, one thing I hinted at with Hyperliquid is this view of it has a fundamentals case for it. And right now, what I'm looking for are other tokens that fall in that category. And I think DeFi right now fits that the best. And, you have names like Maker, you have names like Aave, you have names like Curve. One name that, and I think those are all very compelling, interesting products. I think all of them are not only building for crypto native users, but they're also starting to develop more institutional focused products that can be used. And one name that I think falls in that bucket that isn't discussed quite as much, but is very interesting, is Pendle. For those unfamiliar, Pendle is it's a yield. It allows you to take any token that has yield on it and split it into the principal and the variable yield. And then you can trade those things. So if you're looking for a fixed yield, you can hold the principal token. If you're looking for the variable yield, if you think rates might go up or down, you can buy or sell the yield token. And why I think this is very interesting is because it is probably one of the biggest trades that happens in the traditional financial space, right? Interest rate swaps, basis trades, all of these type of interest rate and yield trades that happen in TradFi and dominate a lot of the volumes. When you explain this type of product to them, it instantly clicks, and they understand why it's very attractive. And they also view it as either a means to take a directionary position, or, which is, I think, more valuable, to hedge their current positions. So the thing with Pendle, beyond that institutional angle, is they've also managed, and this is a common theme you'll see through all three of these projects, is they've also managed to tap into more of the degen crypto native crowd. Because what they've realized is, for a lot of these projects that you're farming maybe points, something non-tangible, what you can do is you can create kind of yield tokens and principal tokens for those points. And so what we're seeing is, anytime a new big project is coming to market, you also see that project launch tokens on Pendle, because they know that's going to drive more use and liquidity for their project. So we saw it with Barachain. I think we'll see it with Monad. I think we'll see it with Mega E. And so I think the problem for Pendle, they don't make a ton of money right now, and I think that's something they're going to have to work towards. It's unclear if the fundamental valuation for Pendle is what it should be, given how much they're earning. But for me, they have a huge total addressable market. And if you're making a bet on crypto gaining more TradFi adoption, and that TradFi adoption leveraging crypto native platforms, not just using their own platforms, I think Pendle fits a great sweet spot there. And the last thing I'll say about Pendle is they have both in the future, they have catalysts coming that I think make the case more attractive. And the big part of that is they are identifying other rates markets within crypto, funding rates, for example, where you can basically leverage their their model, and increase the total addressable market. So sorry, I think that was a little bit long-winded and maybe a little bit disorganized, but that's kind of my general framework right now. Those are a few of many projects I'm looking at. And again, I'm not recommending buying any of these projects or anything like that. I don't know if they're valued well or anything, but I think they're good case studies for how to look at projects that are maintaining relevance and users in this very tough market.
No, that was terrific. It's a tremendous amount there to unpack. Um, yeah, raise your hand. I'll take a few questions and then go to the community. So if anybody's got questions, raise a hand. Take them in the order received. But let's start. You said about you started to talk about digging deep. Can you talk about what for you what that entails?
Yeah, definitely. So for me, it's two different things. So on the one hand, it's getting very deeply involved in the community. I think because I come from what I would say is a more like degen trading background, it's a lot of like just straight up going into Discords and making sure you're in Telegram chats for any community project. It's using tools like Kaido. It's having very well catered Twitter lists that truly allow you to have kind of
Are
like
you using tools like Kaido?
yes, sorry, Kaido is like Kaido is basically it's like an AI tool that scrapes all of this Twitter data, Discord data, basically any crypto platform, and it gives you like a sentiment reading for
Great.
tokens. And then it also has very powerful search tools to help you understand, why a specific token might be behaving the way it does. It's a good aggregator, I would say, of crypto sentiment in such a difficult and like crowded market. Um, and so for me, that's a big part of it is, I think like there's an incredible amount of alpha to be had by just going that extra step and like going into the Discord and asking questions. Crypto for me is, I'm not a TradFi trader. It's very hard to have an edge in TradFi. In crypto, for me, I think the edge is very simple. We're still at a stage in the market where you can go into a Discord and talk to a founder directly. You send a question, you're probably going to get a response from the team. And if it's a good question, you can probably DM the team and get on a call with them. So for me, a lot of it is just like making sure that I'm like going to the most bottom level of figuring out, what is driving interest in the project by speaking to the community. And then the other part is at the much higher level, thinking, okay, crypto is this game of metas and narratives. What are the metas and narratives that are going to catch on with people, in the future, and why are they going to do that? And so if you can match, I think that bottom up and top down analysis, that's how you can really find opportunities.
Makes sense. One of the things I was surprised that you left off the list of 5 narratives was the intersection of crypto and AI.
Yes, no, you know what? I should have said 6 narratives. So crypto and AI, I guess the reason why I left it off right now is when I spoke to you guys last time, it was right after I'd published my report on understanding the intersection of crypto and AI. And that was about a year plus ago. I think at the time, my large view was we were in proof of concept mode. There's some really interesting kind of new primitives being built, but they were untested and it was unclear how scalable they are. I think a year later, I feel pretty validated in that view. I think a lot of the crypto AI stuff we've seen has been very interesting, but has not gotten the type of adoption that you would want. Right now, for example, one trade idea I had, to give you an example, was, okay, we're seeing these chip issues between the US and China. So, maybe we should see projects like Render and Akash start to pick up, right? There should be an uptick in usage, but we haven't really seen that. And so, what I do think, and what I am spending time on now, is looking at what the next generation of crypto AI products are. And that's things like Prime Intellect, that's things like Ambient, Pluralis. And what's interesting about all these projects for me right now is they've basically looked at what I would say the first gen of crypto and AI and what they did. And they're now kind of iterating on that and saying, okay, How do we increase, how do we make UX better? How do we make it more accessible? How do we make it more like a chat GPT product where people use it and they realize an unlock immediately? And so I think things like distributed training, I think the agent space, I'm glad you guys have this agent initiative. I think the agent space is going to be an incredibly rich and valuable space in the future. It's just right now, it's a little difficult, I think, to separate the noise from the signal. And so I'm looking for the market to mature a little bit.
Did you hear anything out of RenderCon?
I didn't. I haven't. I haven't even had a time to
Yeah.
look. Yeah. Did you watch?
No, no, I didn't. But all I saw was the token move.
Yeah, exactly.
Okay, great. We got a question from Albert.
Yeah, thanks, Lou, and thanks for the great presentation, Lucas. I jumped in a little bit late. Were one of those 5 or 6 narratives have to do with Bitcoin?
Yeah. The first one was just Bitcoin. Same question as always. Is it a store value, safe haven asset, or is it a risk on asset?
Yeah, exactly. And I mean, it's very clunky to build with. But like in your research, what do you think it would be good for if we built applications
And
that are
Albert, why don't you
integrated?
tell Lucas what you do?
Oh yeah, I run the Bitcoin AI startup lab, and so
Hmm.
we have a large and leading community uh, supporting founders building with Bitcoin and technologies that intersect Bitcoin. It could be
How many
AI, it could be
cohorts? And sorry,
like
how many cohorts and average size of a cohort?
oh yeah, we just finished our 6th cohort, and the average size. Well, it fluctuates. It depends on markets, right? It's fluctuates on 25 to like 120 teams. Yeah. Uh,
Um, I think for Bitcoin, first off, I'm a trader, so I have to trade this stuff short term and things like that. But long term, I see Bitcoin as a store value, safe haven asset. And I think it has very much the potential to also become a currency that's used more frequently. And I think the real unlock for project things that you're doing, which I think is kind of where the most value could be in the future, is figuring out how to make Bitcoin more programmable and usable. Because that is how you kind of get the integrations and stuff that increase the value of Bitcoin. So I think the big problem is that usually has some sort of security trade-off, and it's hard to balance those things, especially when a lot of Bitcoiners don't want to have to, the reason they're in Bitcoin is they don't want to have to deal with any security trade-offs. But I think we're continuing to see technology improve. I think we're starting to see the launch of projects like, restaking stuff. We have things like Babylon. We've got yield products, things that Maple is doing right now with CoreDAO. So we're starting to see kind of the next gen of Bitcoin as a programmable asset start to come about. I think it's definitely still early, but I think there's a lot of promise there. And to be honest, as an alts trader myself, I will start to get concerned once I start to see a lot of traction there, because if you can make Bitcoin a lot more programmable and usable, I think it's got pretty bad ramifications for the rest of this space.
yeah. Let's see what happens. I think the inflection point is going to happen in the next 12 months as the building technology matures.
Yeah.
Uh, yeah. The other thing, sort of close to Bitcoin, not exactly Bitcoin, but I'm sure you've heard of BitTensor, right?
Yeah, of
Like
course.
like
Of
the you know
Tau.
on the it's sort of like the Bitcoin for AI world.
Yes.
Like what do you think about that ecosystem and in general, like yeah, that
Okay.
intersection. Yeah.
Yeah, this is where like the research versus the trader hats split. So when I was on research, actually when I wrote this piece on crypto and AI, and it was one of the first pieces about BitTensor and Tau. Incredibly intellectually stimulating project in my mind. A lot of promise and potential. Very clunky. There's a lot of friction for users and developers on Tau.
Who,
And
who, who, who did you talk to get smart on Tau?
Actually at the time it was like Constantine, it was Sami Kassab, a lot of like these early Tau contributors and developers who are trying to get the word out. And I think their vision makes sense and is actually very appealing. I think if you talk to some of the builders who build subnets on Tau, I mean, it's a no-brainer. Why would you not plug into a network like that? And it's almost a way to raise funding for very ambitious AI projects. Then I go over to the trading side of things, and what Tau is facing in my mind is they've moved a little bit too slow. They launched dynamic Tau, which is a step improvement, I would say, but is way too complicated for the market to digest. And you basically, I would say, have to spend 400 hours or so diving deep to understand every single subnet, how the different tokenomics work, and why you want to buy them. And there's just not a lot of people that are willing to invest that amount of time. And so it hasn't reached that critical mass yet where you have enough people smart on it that they can go out and pitch it and talk to others and convince them in a much more succinct amount of time why it should be useful and important. And then the other headwind I think that they're facing is, like I was saying, there's all these new crypto AI projects that are coming to market over the next year that have looked at what happened with the past cohort of projects and are trying to iterate and build and improve that. And so I think if Tau can't get kind of the core mind share, I guess I would say, to remain relevant before those projects come to market, they could face some headwinds. But that said, I will say, like, I was just talking to somebody actually before this call, and let me just find real quick what he was saying, because he's built a subnet on Tau, and he's a big believer in Tau. And I was saying to him what I just said right now, and he said, listen, man, like, I think you're missing the forest for the trees. You look at some of the subnets, like Shoots, for example, it's the #1 token provider for open router LLM inference. And that's, bigger than AWS, Google, and OpenAI. And so, for me, when I hear stuff like that, it's more for me, I'm like, all right, maybe I'm just not digging deep enough here, and I'm not spending the time that I need to. And there is a lot of value and opportunity. The other thing I'll say from a trading perspective is, if you look at runes, for me, Tau is very similar to Bitcoin runes. Not in that they're a similar product. Tau is so much more and so much more sophisticated and has real substance. Runes, for the most part, were mostly just NFTs and memes. But the value, for a trader, when you look at runes, the real opportunity there was friction to get to the market first. And a lot of people didn't get to the market first because of that. And then once the market started to get mindshare adoption, they took off. With Tau, for a long time, that's been my thesis, is there's friction. You just need to get past that friction and get to the market first. And then once it gets mindshare, it'll take off. And we're starting to see some green shoots of that with some of the dynamic Tau stuff, with some of the subnets that are starting to get some adoption and interest. But my concern is that, whereas with runes, the friction was just figuring out how to bridge over and buy them, with Tau, the friction is not only the bridging process, it's then figuring out insanely complicated inflation schedules, how that, Tau value accrual and all those things. And so, I think education is going to come about. I met with a guy who built Tau Stats, which is a really informative kind of dashboard to understand the Tau subnets. And they're doing everything they can to simplify the process right now. And I think if they make traction there, then it's got a very bright future. And I think finally, I don't know if they have the user base yet per se, but they definitely have the developer base. And having developers is such an advantage, especially for something like crypto and AI, where you don't have all the most knowledgeable people in the space yet. And so I think that definitely gets its staying power. I hope it makes it, to be honest, because when I first started learning about it, I thought it was an incredibly powerful concept.
No, thank you so much for that. Thank you so much.
Mm-hmm.
Yeah, I feel similarly. It just started to show up on our radar screen because Barry Silbert launched Yuma, which is an accelerator that completely dedicated to just supporting startup teams building subnets on BitTensor. So, and it seems like he's taking it pretty seriously. So I think I think it's coming to an inflection point.
No,
Yeah.
definitely.
Yeah.
And yeah, bring it back to, trading, the like a week ago or a week and a half ago, there was a shock to the market and it dipped to like 180 per tau, but it's now back up to 280 already. Like,
Yeah.
which is going asymmetric with everything else on the market, crypto. I mean, so
No, I agree. It's definitely showing some strength. It's, in a sea of AI tokens, it's definitely out standing out
Yeah.
some, which is
Well,
positive.
I think, Barry came out with the big, he did a blog, or he did a podcast with Raul
Yep.
yesterday. It was the first
Yeah.
time Barry's talked in 4 years. And Albert, I'm the same with you. I mean, I think Barry's one of the smarter guys in the space. And, I was catching up with him. And, he did a deep dive with Yuma. And actually, at Crypto Mondays ETH Denver this year, I did a fireside chat with Evan, the head of Yuma, and it's an incredibly ambitious project.
Yeah. Oh my, I mean, if they get it right, it's going to be incredible. I mean, it's a great incentive mechanism.
Yeah, but I mean, I agree with you. It's yeah, and I think if I can't figure it out, a lot of people are going to struggle, right? Um, so any case, so yeah, Albert, you were going to say, were you good?
no, no, I'm just agreeing with you guys, and I'm like it's very. I mean, it's hard to say what's happening, right? Because it almost feels like a lot of this stuff is, although yeah, crypto's been around for over a decade, 2 decades right now, almost. But it feels like we're still at like 0.1% of like creating, like integrating crypto and blockchain with the rest of the world,
I
So
think
I
we're
feel
early.
like, yeah, I think we're like really early. Like a lot, there could be a lot of disruption. Um,
Yeah.
yeah, but yeah,
Um,
thanks.
Thanks, Albert. So, I'll take the last question because we're almost at the top of the hour. But among the different 5 things that you said, you talked about, RWA, and the second most read post I've written more than 300, is titled "To Prepare Yourself for the Coming Security Token Tsunami," and I wrote that in January of 2018. So I am well prepared. And but for me, I don't look at stable coins and everything else going. I think stable coins are a currency. I think sure they're RWA, but they're a whole nother thing. Obviously been going up and to the right largely, since 2020. I did 26 episodes. But in terms of the securities, and even DeFi. Right. I mean, DeFi is a fraction, right? I mean, there was a great piece that came out of that you guys just published yesterday, I think, earlier this week on, deep dive and just looking at some of the macro numbers. We're still way off, from the peaks in DeFi, and there's still, while there's a lot being tokenized today, there's not a lot that's actually trading that's been tokenized, and that's if it doesn't trade, then it's not really too interesting to most people.
Yes. Yeah. No, completely agreed. I think that's the problem, right? Is it sounds great to tokenize everything, but only if there's demand to tokenize it. Otherwise, you're just creating a new product that has no liquidity. And as anyone
I
tried
call
for
that a brick.
yeah, exactly. Liquidity is king. That is the reason to, obviously there's the infrastructure and operational side of things, but the real opportunity is to increase liquidity for products for more efficient markets. And it's hard to do that. But I do think what is interesting here is two things. First, I think for crypto natives like myself, it's one of the most challenging sectors because probably a lot of the opportunity here is on the equity side and not on the token side of things. And as a token investor, you got to figure out where is that opportunity. But it also gives me a lot of hope because that also probably means you're going to see a lot more tokens coming to market that make sense fundamentally and are not just pure governance or something like that. And so I think there should be opportunities there. And then I think the other thing that is going to be very fascinating to watch is how platforms like Robinhood evolve with this. I would say Coinbase as well, but I think we're actually seeing a very interesting trend right now where Robinhood is starting to overtake Coinbase in terms of just a crypto platform. And
Wow, that's big.
Yeah, and I think it speaks to the fact that that Coinbase largely has catered to a much more crypto native user base, and so they've built a lot for crypto native users. Whereas Robinhood has catered towards just your average, trader, speculator, investor, and so they need
People
to
who
build.
like things like customer service.
Yes, yes, yes. And so they need to build products that fit those customers. And so I'm very interested to see how that evolves. I think Coinbase is laying the road right now to get securities on chain once regulation is through. I think Robinhood will follow closely. I'm very interested to see what Robinhood builds on. They previously had a partnership with Arbitrum. I think if it came out that they were deciding to build their own chain, not using Arbitrum, that could be kind of a canary in the coal mine
Have they
for.
hired anybody? Like I don't even know. I mean, you probably do, but like the crypto people from Robinhood. I mean, they must be around, but I've never run into them.
I haven't either, but yeah, they have a whole crypto team and
Yeah, I mean, I know they're
uh,
doing big, starting to do meaningful volume.
yeah, and exactly, they're starting to do meaningful volume. So I think it's interesting. I think the other thing on tokenization is like we have projects like Plume. We recently had the Mantra DAO saga. We've got all
Yeah.
of these different like tokenization platforms, and it's unclear to me yet, similar to kind of the Robinhood and Arbitrum thing, are institutions going to want to use these platforms, or are they just going to want to build their own platform that they have control over? And the case where I see them going to the more decentralized platform, even if it's a permission environment within that platform, is if those platforms have users, because that'll drive adoption. And so we haven't seen huge adoption yet. We haven't seen huge user inflows there yet, but I'm hopeful that over time we start to see that, and I got to say I'm excited. For me, it'll be a very exciting day when people are using blockchains on the back end without knowing it and transferring things like stable coins, thinking they're just transferring dollars, buying stocks, thinking they're just buying normal shares and it's tokenized underneath. And from a trading perspective, there might not be a lot of opportunity there, but from a just loving to see this space grow and get more adoption, I think that's really could be powerful long term.
From a
I
better
mean,
world.
they're
And
not doing it with trading, right? They're doing it with Luma. You're using crypto on the back end and you don't know it. But yeah, you're right, not with financial products.
Yeah.
I see. Okay, well, look, this was a fantastic hour. Thanks so much, Lucas. Yeah, really appreciate it, and look forward to seeing you again soon.
Of course. Thanks so much for having me. Great talking to
Thank you,
everybody.
Lucas. Thanks.
Thanks. Bye.